Hello, everyone. So today, actually, Josh is here with us too. So, Josh, come on stage. Come on, buddy. There you are. There's
Hey
Josh.
guys.
Hey. So we'll give it a little bit of time for everybody to start, filtering in. I'm sure most of everyone is here for the free accounts and the other stuff. So we're going to try to speed everything up a little bit more this week. Sometimes these can drag on, but we're trying to offer some good value to traders. That's the purpose. We're trying to help traders. We know what the traders struggle with. We coach hundreds of people, at least I do, and I've met with so many different traders. I've had those issues like those other traders. So we're trying to help traders get better, not just keep them in that process of recycling assessments. That doesn't help anybody. And that's our goal is, one, to show people how different strategies can help you with managing your psychology, as well as trade management, reducing size, smaller size. I know nobody wants to see it because everybody's so focused on P&L, but smaller size gives you a lot more opportunity to actually achieve success in trading. So that's kind of the focus today is let's reduce your size. Let's get you into a position you can actually allow your system to work. Because when people are risking 40% of their account in one day, you have very slim margin for error, and you have very little chance to actually succeed in trading. Because look, no one day should ever jeopardize your account, even a big chunk of your account. So welcome everyone. We're going to try to get this going a little bit quicker today. And we're going to try to do the giveaway quicker, because I know most people are in here for the giveaway. I don't blame you.
But we think these calls are cool because we're able to showcase some of the traders that are trading with us, and it's very clear what they're doing, hearing what their struggles are, and we'll give you kind of a little sneak peek into what coaching sessions look like with us, so you know exactly what to expect. So yeah, we plan on keep doing these, and just we love the feedback on them, and anything you'd like to see or any companies you'd like us to talk to, we've got a lot of connections, and we can bring on a lot of guests. So thanks for joining, and I'll let Brian take over from here.
Cool. So let's first get into how's your trading going this week. Let's go to the audience. Have quite a few people in the stream. We'd love you guys to invite more people in the stream. We're trying to add value to the space, and I think a lot of people are starting to catch on to the value that we add, and we're actually here for traders. We don't just say it. Anytime people are struggling, like you'll see it in our Discord, I'm reaching out. I'm trying to get people in to talk to them and talk them through it. Because look, we're in business, but we're also trying to help traders, right? So when people are resetting a bunch or buying a bunch of accounts, that's cool for our bottom line, but that doesn't help people. And like, it pains me to see people struggle. And if we can help people, even if we can't help everyone, at least we can make a difference in the space and try to encourage good, sound decision making and good trading. That's awesome. I'm glad you're slowing down in your assessments. That's the goal, because a lot of people, I think, they focus on trying to pass it really fast. But look, passing an assessment's just one part of the step. It's only a little small part of the equation to long-term success. Your goal shouldn't be to pass an assessment. Your goal should be get through the assessment while managing risk, and get into a brokerage account and be in there long-term and pull money consistently out of the market. This is your job. It's just tough because, there's not a lot of accountability in the space. Most of these firms encourage gambling, and that's a bad thing. Great yesterday, poor today, struggles with contract size. Yeah, so trading in queue in any account, depending on what your hit rate is, your win rate, and how much wiggle room you're giving yourself, to pass assessments, that's great, because you can get on a lucky streak and pass that assessment really quick, and then you're on to the next step. But here, the assessment's one part of it, right? Once you get past the assessment, you get onto the real game, which is getting into a funded brokerage account where you got to be consistent and actually continue to pull money out. Like passing assessments, getting one small payout, that's only a little portion of it, right? It's finding consistency, and that's the major thing. And when you size too large, you're never going to find that consistency, and that's the problem. We got to get people out of the mindset of looking at your P&L all day, every day, right? We got to get back into adjusting for risk. Risk is king, right? You got to look at the risk, not at what you can make. You got to look at what you can lose, not what you can make, right? That's the foundation that people need to get into. You got to get into the process, right? So let's get through the rest of these, and let's get into kind of the challenge of last week. You know, we gave everybody a challenge. Look at your best trading hours and only take trades inside those trading hours. And, you know, that's important because look, a lot of strategies only work during certain time periods, right? What will happen is a lot of people will actually, you know, end up taking trades during lunch, and they'll take trades before the market opens. And once you start looking at the data, you'll realize like, oh my gosh, why am I taking trades during this time? They're all losers, but that one winner created some bias in your mind to think, no, this is a great time to trade, right? But it's not. It's you're not trading well in those hours. You just have this confirmation bias because one trade worked out for you, right? So did anybody, you know, take us up on this? If you did, I'd love to see your data. I'd love to set it up with you. If you're willing to share the data, we'll give you a free account and an assessment. And you know, let's reward good behaviors. If you're comfortable with being on the stream, you know, here's our email. It's media@thefutures.desk. Pretty easy. Just reach out to us or DM me. You know, I'm always on Discord. Josh is always on Discord. You know, if you can reach out to me, that's better because Josh is super busy. He's our, you know, our main guy that's like reaching out to other people, but he's also building everything. And we need to build more tools and get better at anywhere we can. And he's our guy for that. So reach out to me. I'm usually available. You know, look at your best trading hours and really dive into the data because look, less is more in trading. And if you can eliminate bad hours, it's going to really help you get better at trading in those hours that actually work really well for you. And, you know, in our practice accounts, I actually recommend people take all trades, you know, all hours, all trades, all setups, and tag them because you're going to find some nuances in your data that's actually going to be really help you get better at trading at your best times, right? Day type, we shouldn't trade. Yeah, news days, like major FOMC days, you know, generally the morning, they're going to have some kind of lower volume, lower liquidity, lower movement, you know, less range, right? Less volatility. And those days generally don't offer very good trading. And then after the news, they become very, very, very illiquid and sporadic, right? They'll usually do fake out moves. They'll run really high or really low and then retrace the whole move. And then you're thinking you're catching it. It's like, no, just don't trade those days. Like you may have landed one great day in the past, but that's not anything that's going to help you. You know, it's an outlier. It's confirmation bias. We got to get away from the confirmation bias and get into, let's look at the data. The data will tell us, right? Data's king. So let's get into reducing size. You know, look, less is more in trading. And I know it doesn't look great on your P&L and you want to see these big numbers and you feel like you're not making any progress. But look, if you're taking too much size, any one trade is going to handicap your account. Any one trade is going to put you over the edge. You're trying to rush, but in the process, you're becoming less effective and you're getting yourself in large drawdowns, which look, large drawdowns are not something you want to see in your account. There should be no reason you're hitting your daily loss limit. The daily loss limit we have in place, it's a safety net. It's an emergency stop. That is not what you should be risking every day, right? Especially if your earnings are capped. The reason we do that is because we want people to control themselves through this process and then continue controlling themselves in this process. It's about accountability. It's about managing risk correctly, right? So trading too big a size too soon leads to blown accounts. That's a reality. That's really what it's about. People start focusing on the P&L instead of the process. Big size amplifies both good things, right? Really big P&L. It's great. You know, I made $2,000 today or whatever, right? But also amplifies risk, right? So if you can win 2,000, you can also lose 2,000 in a day. So anytime you increase size, you're increasing your risk. And unfortunately, in trading, risk should be the primary focus, but most people focus on the P&L. It's such a bad metric to look at. So big size amplifies without proper risk. Big size is double the whammy, right? It's doubling your what you can lose, but it's doubling what you can win. But everybody's so focused on what they can win that they fail to realize, like, you're risking that much more. You're risking something. You're putting so much on one day, so much on one trade, that you're basically you're making it so you can't be successful. Like, why would you want to put so much on one day? Like, think about professional athletes, right? They're going to have bad games, right? And if you have a bad day, you can't basically be like, okay, so if I have a good day, that's great. But if I have a bad day, I'm no longer going to be a pro athlete, right? That would be the type of analogy that we could use. Is just like, any pro athlete has a bad day, they're done. They're out of the game forever, right? You can't do that. Because you're not always going to perform, great. You're not always going to, your strategy's not always going to win every single day. You got to prepare for the worst, right? That's how you succeed in trading. You prepare for the worst. And that is through reducing your size, having a good foundation. Smaller size lets you focus on execution, right? It gets away from focusing so much on the P&L and where am I at on my P&L? How much can I make today? And, I need to make $400 today. I need to make $1,000 today. And the market's not there for it, right? But people get so focused on that. Let's get out of that habit. Let's build a good foundation. Reduce your size, right? Get less size is better. Even a good strategy can fail with bad risk management, right? Random streaks of losses happen. They happen. Streaks of losses happen, and it's not in your control. It's not anything you're doing bad. It's just the system works in that way. Too much size really reduces your ability to have a cushion. So if you're taking, let's say, $400 trades and your max daily is $800, you have 2 chances to be right. Like, why would you ever give yourself that limited amount of chances to be right? It just doesn't help you, right? Losing streaks can happen, even at a 60% win rate. We're going to jump into some numbers here in a minute. This is the danger of oversizing. Like, look at this chart. Like, even with a huge win percent, you're going to have streaks of losses. Like, it's part of the game, right? 60% win rate. Look at here. Most people are in that 65 to 40%. Some people have higher win rates, but generally they're curve fitting to have that higher win rate. It's not because they're trading really well. It's because they don't like losing and they're doing stupid stuff to get a higher win rate, right? Win rate should not be your primary focus. Your primary focus should be balancing win rate with how much you risk and how much you win per trade, and finding some type of balance between those. And that's what you need to do. Okay. Even at 60% win rate, a 96 chance of 3 losses in a row. Like, look at this. Have this on your computer somewhere to look at it and remind yourself, I am going to lose. Losing is part of the game. It is okay to lose. And if I lose, I need to make sure that I'm losing the correct amount, because if I'm losing too much per trade, I'm never going to win long term. I'm going to blow up. And most of these firms don't cap you're losing, so they let you blow up an entire account in one day. And like, that's great if you can get past it and take one payout, but long term, you're never going to have any success, right? That's what they're banking on. They want you to lose. They want you to lose quick, and they want you to lose often. We don't do that here. We try to peak, we're trying to cement good values that are going to carry over into funded. All right, let's go to the next slide. Managing drawdown and expectancies, right? Here's a R multiple. This is a great thing to look at, and most people don't have this in mind, right? For a 67% win rate, you need an R multiple of about a 0.5. That's not really my wheelhouse. There's scalpers that like this, 1-to-1, lower win rate kind of thing. And then you have to realize, like, look, on paper, this is great. But in reality, you're going to make fat finger mistakes. Like, I'm going to accidentally click my keyboard and get into something I didn't mean to get in. And then if I'm in a trade that I didn't mean to get in, am I going to get out quick enough, or am I going to hold it thinking I can get back break even? Like, that's not where you want to be as a trader, right? You got to slow down and think about where your strategy is, what the win rate is. and then create an extra buffer to be like, okay, so if I mess up, me personally, because I fat fingered or I miscalculated risk on this trade, I got to build in that buffer too, and give yourself more room to be wrong. Because when you do that, it takes a ton of stress off you. It allows you actually to trade better, and it lets you focus on the process. But a lot of people don't even know these numbers. They haven't looked at these numbers. These numbers are crucial to understanding, one, how often you're going to have losing streaks, and if you have losing streaks, what's the percentage? How long is it going to take to recover from those losing streaks, right? And here's another really nice chart. It's a drawdown chart. It lets you know if you're 10% drawdown, it requires you 11% in gains to recover that 10%. And when you start getting into the 50% threshold, I lost 50% of my account. I need 100% of gains to get back to where I was. And this is going back into, like, look, we have a DLL. It's a 40%, right? Look at this number here, guys. 40% drawdown requires 67% to get back to break even. Do not use our daily loss limit as a stop for the day. Do not do it. It's going to put you too far behind. Just like in a real account, when you're in our brokerage, we do not want you risking 40% of your account one day, because you're never gonna find any success. You got to reduce your risk. Yes, I know it's not glamorous. Yes, I know it's not going to be as much P&L as you want, and you're not seeing big numbers, but you're also not risking big numbers. And it's a slow, steady, methodical process. It's not a quick get rich kind of scheme that we're doing. It's got to be slow. You got to slow it down, guys. Okay, so next slide. Losing streaks and loss of capital. This is another really great chart. The 1% thing, that's 1% of total risk. You don't technically have enough room in your assessment to truly follow 1%, but you can get a lot better at it, right? You got to look at it to look at your risk total in the account and work backwards from that. So if you have a $1,000 account and you have 4 setups per day, then you're going to have to look at, okay, if I have 4 setups per day, how many days in a row can I have losers, and work backwards to find where should my risk be set. And that risk being set correctly then gives you an opportunity to then actually be successful, right? That's super important. Okay. So some of these, we'll post this online. You can freeze frame it and take a screenshot of it. Look at this stuff. This stuff is game changing, right? You guys got to know your win percent. You got to know how much you're risking per trade. You got to know how your trade expectancy as far as how many losers in a row you can have, right? A lot of people will come in and be like, well, I'm risking 40% per trade. It's like, well, cool. You got 2 chances to be right. And then your account's gone, right? That's not a good way to be. And unfortunately, the industry pushes this stuff. They want you to risk really big because you'll blow up. And then guess what? You have to reset or buy another account. We're trying to change that. We're trying to push traders into good habits and thinking about risk first and foremost, right? That's our goal. That's our objective as a firm. Solution, trade smaller, manage risk. Let your edge play out, right? If your edge is a 60%, 50%, mine's personally in the low 40s, right? I need to adjust and allow my edge to play out, because if I'm not letting my edge play out, then I'm never going to allow it to win, right? And if I have a 40% win rate with around a 5-hour return, that's great, right? That fits my psychology. It might not fit yours. If I don't let my edge play out and I go through a series of losses and I've risked too much, my account will be gone. I will have no room to allow my setups to work because I have no more capital to trade, right? Back to the solution, when to start sizing up. So sizing up really isn't for most people right now. Like, most people that are in these systems are still in the learning phase, right? That's why I highly recommend, don't sign up for an assessment with us. I'm telling you, don't give us your money if you don't have a fully flushed out system that's been back tested. Do not sign up with us. Please don't. What you need to do is get a practice account or back test and prove that your system works. And you can do that through using our practice accounts. They're very minimal cost. You don't need all the fancy tools or anything like that. You can be very simplistic in the way you trade, right? You don't need a bunch of fancy stuff. You don't need some super complicated strategy. There's a ton of strategies out there that work very well. You need to get into practicing and logging the data to figure out if the strategy works on its own, right? In a very vacuum type of condition where no mess ups by you. You trade the strategy perfectly. You let your winners go all the way to target. You let them go, stop you out where you need to stop them, and you're not getting in the way of the strategy, right? And if you can prove that that is making money and it's working well, great. That's awesome. Next step is then to forward test it, to practice in an account and take those trades live to see if your decision making still is on point. You're able to execute live, and you're able to do all those things in a live environment. And then once you have all the data through a practice account where you're not risking money, there's no stress there, and you can achieve that, then you move to an actual assessment. Then you put your money on the line. And if that's we're the firm for that, great. If not, go find another firm. There's lots of great firms. But we offer the tooling and the data to actually make you get better, right? We force you to get better. And we have the guidelines to help that. So summary, trade small first. Oversizing too soon leads to blown accounts. Expect losing streaks. Those are part of it. Protect your capital. You are a risk manager. You are not a trader. You are a risk manager. Think about that. If you're risking 40% of your account on one trade, you're not going to find any success. You're going to blow your account. So don't do it. Next slide. The giveaway. All right, way quicker. How long we've been on? 23 minutes. And now we're at the giveaway. This is what people like. They listen to me ramble so they can get to the giveaway. So let's do the giveaway. Entry is now open. Winners are picked by the spinny wheel at the end. Raj will handle that. And I can tell you the end. We're going to try to make this quicker so the end's not too far away. So live coaching sessions. Let's go ahead and get into that. All right, Little Beard.
Hey.
How you doing?
Pretty good. How about you?
I am doing well. So let's get into it. I know we've talked before. Maybe if you could share a little bit about what type of trader you are. There's types, there's scalpers, there's more intraday traders. And then without sharing your details of your strategy, I know strategies are very personal and private to people, but if you could kind of just share, what type of struggles you're having right now, and then if you found any value in using our systems as far as tagging your trades and looking at your data and kind of just sharing that stuff.
Well, start off by saying 100% using the tools you guys provided have helped me tremendously by realizing what I'm doing wrong. And because if you trade in Q, it rewards you for doing dumb things. So to get out of that mindset and to actually just look at the data, find out where you're actually doing well and where you're not doing well at, it helps. But yeah, oversizing, definitely a big thing. When I first started an account with you all, it should have been a micro account. And I was still trying to trade like I normally did. And it was not a great idea. And then I almost hit, my loss threshold. And then I started sizing down and inched back up. So it was a struggle, because then I started, like I said, trading P&L. And those are sort of the struggles I had, because over the years I've developed so many different playbooks. It's like, which one do I stick with? And after doing all the data and so forth, I've come to realize I can do them all. I just need to, play them smarter. And so now I think about them before I get in them. Like today, I play floor pivots a lot, or I'll play fibs a lot, or I'll do them both, especially if they're within the, within the structure of what I'm looking for. So today, I opened up at a floor pivot, and I took it, because that's the data has shown that it works out for me. So that's one of my major things is that.
Awesome. It's really nice to start recognizing on your own, like, about the sizing and not giving yourself enough, room to succeed, right? You're suffocating your ability to actually succeed. by taking too much risk in any one trade. You're relying on that trade to work. And that's really what everybody self-sabotages, because they get into that mindset, they have a loser, and now they're trying to make that loser back. And because they risk so much, their account's in jeopardy, and now they're doing even worse stuff. And it's like this, I guess, avalanche, right? It starts real small and then builds and builds and builds. And then before you know it, the account's gone. And you're like, oh my gosh, what did I just do? So going back to your data, through the journaling and tagging your setups, have you found any correlation or confluence between the two different setups that you're utilizing, or have you found what works really well and what doesn't work well?
I've started just sticking to the two, which is for me fibs and the floor pivots. So I just stick to those mainly, and those I've sort of thrown out everything else for the most part.
Awesome. Yes. Sometimes reducing and getting rid of a lot of the noise will really help you start focusing on the process and get away from looking at the P&L. And that's the important part. You got to have clarity in what you're doing, or else you're introducing randomness of your own trading and how you're trading into something that also has randomness, which an edge has some randomness to it, right? So you have this double compounding randomness that takes place, and then it makes it really random. And then you're really not able to hone your edge at all because of the randomness that's compounding, and that's what makes trading so difficult. So now that you've reduced what you're trading and kind of gotten back to, only trading a handful of setups, and I hope you're doing that in a live sim, or like a live sim in our practice account environment, not actually putting money on the line. Have you noticed any psychological issues you're dealing with right now, or are you holding trades short, like you're cutting loser or like winners quick and holding losers longer, or like what are you dealing with right now?
I tend to hold my winners longer, because when I was doing the TFD accounts, and I'm shooting for like $100 a day. That's what the assessment was, right? $100 a day, and I'm doing that with one micro. So now, on other accounts, I feel like I can hold longer because I have more confidence in those setups. And I go for my daily goals, and that's it. Lock it up after that. And I started using, like, with the TFDX, the trailing personal loss, to keep the green days green.
Yeah, and using those, like, it's weird because people don't utilize it, and they think that, oh, no, I can stop myself. That's great when you're not emotional.
Yeah.
But once that emotion sets in and you're tilted, either to the upside or downside, you don't have the ability to stop yourself. And by having those things built in where you can't circumvent them, it's a game changer for trading. And if people aren't utilizing, I highly recommend you utilize the built-in risk controls on TFDX, and as well as Rhythmic, right? They're super important to utilize. It will stop you from yourself. And a lot of trading is because there is no accountability, in the sense that you're only accountable to yourself. Having any extra accountability built in is game changing. It's really, really helpful. Cool. So as far as other issues you're dealing with, it sounds like you found some tooling that's helping you.
Yes.
But what other things are you finding? Are you trading random systems, or are you like trading outside of your plans, or is everything going pretty smoothly now?
I've reduced that a lot, and I've noticed, though, because I trade throughout the day, that the further I get into the day, the worse I get. Right?
Okay.
If I trade the open, like, one of my rules is I don't trade the first 30 seconds of the open unless I'm already in a trade. But then after that, if I'm in a trade, it's usually fine. Either I win or I lose, and I keep going on about my day. But then if I trade later on in the day, it's like throughout the day, it just gets worse and worse. So I've had to cut out some of that excess.
Yeah. And what will happen, look, trading, you get hyper focus. So the one, mental capital and emotional capital begin to deteriorate later in the day, right? So especially if you're a higher frequency trader, as you trade more, you expend your emotional capital. you expend your mental ability to be hyper focused, right? Just like any professional sports. But the difference with us is we continue to push beyond what limits we should have and what we should set, right? And some days it may work out, but a lot of the times, because you get so exhausted by the end of the day, you're going to see a decrease in your performance, a decrease in your ability to execute and make good, sound decisions, right? You just get worn out. And that's why a lot of people say, hey, you know, I come in, I make my trades, I'm done at this time and I'm done, right? And they'll actually see a lot more success. Yeah, they'll miss a move. Yeah, they'll miss this cool, you know, big old trend, whatever. But guess what? In the long run, they're protecting themselves from that risk. And what happens is they actually get a lot more consistent success, right? I found that for myself. And again, trading is very individual in the sense that things that work for me won't necessarily work for you. And that's why it's important to identify that. So if your performance starts to slip, then actually make a note of that and stop trading after those hours, which you've already done. It's great. You're coaching yourself. And that's really important in trading because, as you know, there's no accountability. And, you know, at jobs, like if this was your job and it didn't matter about your P&L and literally you were paid to execute, you'd probably do a lot better, right? Because somebody, if you didn't do your job, would fire you. And now your money isn't tied to, you know, how well the trade does. It's actually tied to your performance as an actual trader, executing, risk management, following your plan, etc. Right?
Mm-hmm.
Cool. Anything else that you wanted to touch bases on? I mean,
while you mentioned it, you're by yourself. There's no accountability. Having a small, you know, even a small group of like-minded traders to work with. Like I'm in a small group, and you know, we share ideas all the time. And there's one guy that's always preaching size down, and he's not wrong. It's just some of us are more stubborn than others.
Yeah, he's not wrong. And I think sizing down makes you feel like you're not accomplishing as much, right? It makes it like, oh man, you know, I'm such small size, it didn't even matter. But what it does is it helps you open your eyes to be like, get away from focusing so much on P&L, and then the trades don't feel as, I guess, you know, conditional on the fact of the outcome. You're not focused on the outcome anymore. You're focused on the process of the trade. You're focused on executing and following your plan. And then what's funny is you actually trade way better. And then as you scale in and get bigger and bigger size, then hopefully all that carries over. And then your P&L starts reflecting more and more, right? You got to get away from focusing on the P&L. So it's easier said than done, right? Much easier said than done. But it comes through a process and a good foundation and doing it over and over and over and over again.
But the tools have made me more cognizant of the trades I take and how I'm taking them. And even without using the tools, I can more readily recognize where I'm faulting myself.
Yeah, that's our goal.
Before, yeah,
data driven. Try to check the emotions and give people a very clear path and process where they're not just randomly filling around in the dark. Because look, you can wander around for years like that, and don't do that. Be driven by the data and don't create these like weird biases in your mind. Like, oh, last time I took this breakout, it was like amazing. But you know, overall the data, the back testing for it it's subpar setup. Like, why are you taking it? But people get sucked into it and they don't really know that because they don't have the data to tell them that it's good or bad or, you know, sucks. They just don't have it. And that's hopefully why, one, we've created what we created, and hopefully people start to realize the value that is journaling and tagging your trades, and they get to see, you know, the end result of that. But I don't want to keep anybody too long. This is way shorter than we'd normally do for coaching, but kind of get a gist of it. We try to talk through stuff, and we try to provide guidance. And, you know, every trader is different. One trader might struggle with watching their P&L. Another might struggle with hesitation. And really, that's why each coaching session is more individual, and it's focused on whatever the needs of the trader are. And we're just trying to help people, and we're doing the best we can in that forefront, you know? So, you know, let's move on. I think then next thing is maybe the giveaway. Is that right, Raj? Raj, are we there? Raj, he may have stepped away. So with that said, I'll jump into some questions, and let's go ahead and get Little Beard off, and let's do some questions. All right. Questions. Let me scroll up here. Yeah, so what about if I do much better on up days versus down days? Should I trade on weekdays? So is your question like when the market's trending up? Are you saying when you're doing well as a trader, you perform better, and then when you have a bad day, it gets really bad? I'm not sure. If you could add a little bit more context to that question, I'll definitely answer that. Next one, just size. What's your win rate? Kind of looking at win rate for some people. People are sharing their win rates. Looks like a wide variety. Usually kind of between 40 and 70% is normal. Yeah, we can touch on this one. Rookie mistake, not reading rules, thinking the sim funded have no DLL. So yesterday took a larger leverage trade. Yeah, and that goes back into, look, you got to know the rules of each firm. And the reason we created the rules we created is because our mindset is we're not trying to get people in this recycling of assessments, right? So most firms, they may have easier rules during the assessment, and then the next step, what do? They add extra rules. They add consistency to something that should not have consistency because you're going to the next stage, right, to get a payout. So they actually add rules. We remove rules. So when you get to the next stage, we actually remove our form of consistency. We remove the profit, right? Limiting profit, etc. We actually remove stuff. We make it easier. However, by doing that, we're trying to make sure that we're putting people on a good system where they're really respecting risk. And a lot of people, I think, they mistaken, the DLL, that max DLL, and think that that should be their stop on the day, but it should not be, because generally that DLL is twice the size of what you can actually make on the day, right? So now your risk, it's like a reverse 2-to-1 or 1-to-2, however you want to say it, right? Your reverse of what you should be. So you should actually set a personal stop. You should use the tools that either Rhythmic have or TFDX has for risk, and actually reduce your risk to be more 1-to-1. And if you do that, where meaning you can earn what you can lose on that day, you're going to have a lot better time in the assessment. And then that should carry over into when you get into the brokerage, and you should never risk more than what you're going to earn on day. And that will help you where you get those days where you got like your losing day is like 3 times the size of your average winning day. And you'll stop yourself from having those really big losing days. That's the goal. To the trap of sacrificing the. Yeah. So look, I've done it too. Everybody's done it. You get so focused on winning the day. You're like, I want to win this day. I'm down on the day. My thought process is jeopardized at this point. I'm not in a good mindset, but you're like, no. I've done it before. I'm going to do it again. And that's like this weird thing with trading, where in any other sport, if you work harder at it, generally you're going to perform better, or you're going to see some, better outcome because you're working harder. You're working towards that goal, or you're able to work your way out of it, right? Trading's not that way. In most cases, when you really try to force a day, the market punishes you for that. And you're just going to end up with a bigger losing day. You don't ever want to do that. You got to realize that with trading, you can't force it. You got to just trade your setups, and that it is what it is. 30% win rate. This person has a 30% win rate and got 3 PAs. So look, 30% win rate's fine as long as your risk reward is there and you as a trader are able to trade that, right? So here's the issue is, like, a lot of people will have really high win rates with low R's, or vice versa, have really low win rates with really high R's, but not everybody's their psychology can trade like that. So you got to be careful. Raj, are you back? I hope you're back because I'd like to do the giveaway and get this done. Looks like somebody's leaving Pilates class. See you later. Thanks for joining us. Yeah, small size, this is true. Small size and seeing smaller winners and smaller losers is a huge demotivator. Like, I get that. I get it. That's okay. But you got to focus on what's important, right? The P&L is just a subset of your good trading, right? So if you focus way too much, and it looks like Raj is doing the spin, if you focus too much on your P&L and you make it all about making money, you're never going to find any success. You got to focus on the process and let good trades work and cut bad trades. And if you're too focused on the P&L, it's never going to happen. Go ahead and spin it, Raj. All right, this wheelie wheel is spinning. Congrats to Anish. Hopefully I said that right. Please reach out to us. We're going to go ahead and do another one. Spin. So we try to make it a little bit quicker today so people aren't waiting around for the free accounts, because I know most people are here for that. Sean, congratulations to your free account. We will reach out to you, I think. And is that it for the day? I think that's it. So we'll open it up to any questions. So here's the question. So the DLL, right, our emergency stop. So understand we're a business and we have to be competitive with others, right? So if, another company, I think, just removed their DLL and everybody was cheering about it, it's like, yeah, but that's not beneficial to the traders, right? The thing is, with ours, it's 40% of your account. And we thought and we felt when we were discussing all this stuff, it's like no trader should blow up their entire account in a day. And if we totally remove the DLL, which people would probably embrace and cheer, that's not helping the trader. I don't care the psychology of the trader. It's not helping them, because look, you should not blow up an account in one day. That's not ever going to find you any success long-term. Maybe in the assessment game or the eval game space, yeah, you might pass some evals, but long-term, your luck's going to go against you and you're going to blow accounts and you're just going to be burning through capital. And it's not beneficial to traders. Why is it right now that it can be, 1 to 2? It's because it's an emergency stop. It is not the stop you guys should be using. You should have your own set stop. And that stop should be like, at most somewhere between 10 and 20% of the account, depending on what assessment you signed up. The slower, the better. Like, try to make everything to 1-to-1. We give the users the ability to do it themselves, but totally removing it would be bad, and reducing it anymore would have people get upset and be like, oh, my daily loss limit's too small. So it's really just trying to balance it to make it fair, but also make it protect traders from themselves. So we balanced the best we could, and that's why we did what we did. And we think it's beneficial. We don't want people blowing up. We want people to get out of that mindset. It's a terrible mindset to be in, and we don't want people recycling assessments because it doesn't help them. It doesn't help traders. Yeah, so that's that question. I'm just reading some of these. This is a great one, right? Look, there's two different styles and kind of like a mix of them too. One is more systematic, right? You have a very systematic approach to trading. So you have very clear rules. You have everything is set in stone, right? And then you have something in between where it's more kind of nuanced trading, discretionary trading mixed in with a system, right? And then you have straight up the guy's in tune with the market, or girl is in tune with the market, and that's how they trade. The issue with more of a discretionary style of trading is there's a lot of inconsistency with your trading. So it makes it really hard to understand if it's you or the problem or it's a system that's the problem, right? And it makes it tough to like back test it. It makes it really hard to hone that edge. But it makes it harder, but I'm not saying it's not impossible, right? I have more of a systematic approach with more of a mixed in intuition based on my entries that are more triggers, where my system is this, right? Very systematic levels. And then my entry is more intuition based. Like I'm seeing the speed of tape do this. I'm seeing somebody refueling on the bid at here, right? And with that, then I'm making a decision based on my system, right? Should I enter based on the nuances of what I'm seeing on, you know, the delta or something like that, right? All together, where that's not it's not 100% systematic, but it's not 100% intuition or discretionary based. You're not wrong. You just got to figure out how to implement a framework that you can work around that discretion, where you're not just randomly getting into every single trigger that you see. Because if you get into trigger trading and everything's a trade, you're not going to find any consistency in that. So be careful. Congrats on winning. It's a great question. So we actually recently, I think we pushed through 3 people. Look, it really comes down to risk management, right? If you're doing a really great job through the assessment, one guy I can tell you, the guy spent, I think, 20 something days. His assessment was only 11 days. And yeah, he made it through slower, but guess what? He didn't care about how many days and how quick he could pass. And guess what? We put him directly into a live brokerage. We just did that. This is the most recent guy. And I think we're going to have like a little snippet with him soon. Just to say, you know, what we didn't know the guy, like he didn't know us. And it was based on his performance, and his performance was great. His risk was super consistent every single day. He took his time, his profits and losses were equal. Like he never had a day that was like twice his winner or anything like that. And it's like, yeah, absolutely. We're going to take a risk on that guy, because as long as he can follow suit and continue doing what he's doing, he's going to be successful in the brokerage. And I'm pretty sure today was a green day for him, his first day in the brokerage. So congrats on that. And we'll probably have an interview with him. I don't know if he's camera shy or not, but so is there a hard set, a metric for that? No. We use common sense, right? It's common sense. It's like, okay, the guy signed up, he has consistent results. His risk is very even. He's not risking too much to, you know, he's not risking 3 times his account to get those wins. He's not trading 40 million times a day. You know, it's consistent. And that's what we're looking for. We're looking for good performance, good risk management. And if you have those things and it's a higher probability that you're going to pass anyways, then why are we going to make you make a buffer? We'll just stick you in the account. That's something that it's a case by case. I can't give you hard metrics. It's common sense based, but if you're controlling risk, you're taking your time, then a very, very high probability we're just going to skip you and get you straight into a brokerage account. We're not going to delay. Thank you so much for sticking around. I think the core people are still here, most of them. So let's get in this challenge, and then I'll finish the rest of these questions. Your challenge this week, before trading, do an emotional check-in. We have a morning check-in routine. Please use it. It's very, very, very helpful to know and be aware of your emotions. And these emotions carry over. Understand if you have a fight with your significant other, a family member, that's going to impact your trading the next day, right? Maybe generally after 2 or 3 losses, you're okay. But because you had an argument the day before, you have residual emotions that carried over into the next day. Be cognizant of that. That can impact your trading. And if that impacts your trading, you can jeopardize your account, right? You got to know, you got to check in each morning and see how you're doing. So check in, and then also do your end of day check-in too. That's really important. Awareness, better decision-making. You know, that's an end goal. That's what we're trying to accomplish. Okay, next slide. Next week, the psychology of consistent trading. Join us next week, Wednesday. We'll try to keep it short. it will be the webinar. The goal is to continue to provide value to the space while also giving away free accounts. I know everybody's here for the free accounts, as well a little bit of guidance. We're trying to keep it shorter, under an hour. Cool. Next one, if you are comfortable with being on live stream, please reach out to us. Either DM me or shoot us an email at media@thefutures-desk right here. We'll leave it up for a second. Rash, can you go back to that one? There we go. Leave that up for a second so people can grab it. And then let me go through some last minute questions and then we're done for the day. I'm trying to keep it under an hour. Already answered that one. I trade much better on bullish days. Yeah, so people, at one point I was a very, very bullish, bearish trader. I did not like going long. I hated it. I did not like doing it. So what I did is through back testing, through Sierra Chart, I love Sierra Chart. It's not a plug. I'm not sponsored by them. I'm not endorsed by them. I hate their customer service. I don't like the way they handle a lot of stuff, but their platform is amazing. I love it. It's a great platform. It is not fun to learn, but I love Sierra Chart. One of the things I like about it is back testing, and I manually back test. I don't automate a lot of back testing. And in that, I will replay the market. I'll pick a random day and I will look at it. I'll find my levels. These are based on NADRO. Most people know I like NADRO. I trade NADRO. I love it for the framework, but my triggers are all based on my own style of trading, which is order flow, speed of tape, delta. I really love delta. Those are how I get in and out of trades. So with that, what's important is through back testing, and I am able to hone my skills through backtesting, and Sierra Chart offers that. And also it allows me to, if I get bored or if I'm, having a bad day, I can go backtest instead of actually focusing on the market. And it makes me feel like I'm getting somewhere. I'm not just wasting my time staring at charts and not getting any value out of it. So backtesting is huge. I highly recommend Sierra Chart or anything else that allows backtesting. Do that. That's where all the value is. So what percentage, let's see, this one, approximately what percentage of traders are moved to live instead of sim after passing? This is a rough number, probably 30 to 40% at this point. I don't know the exact numbers, but I'm probably in that wheelhouse of 30 to 40%. However, the other number is people that make it into the buffer earning stage. I can tell you, once they pass the assessment, get to buffer and then buffer to live. And that's not accounting for the people we directly move, where they have to earn their way to it. It's in that 70 to 80% range. Meaning if you get through the assessment, you're likely going to be moved to the brokerage. Like that many people get through the next step because our rules are still there with how much you can lose. And I think, people are using the systems and it's helping them get to the next stage, and they're continuing to do what they should do. Now, I would love to say that once in the brokerage, everybody's finding success. It's not happening. People are finding success, but a lot of people are, and I've done it myself. They are getting away from what worked and trying new stuff. They're changing their risk. They're doing this and doing that. And I think maybe it's a breakdown on our part where we need to offer more assistance once they're in the brokerage account to be like, hey man, we got to keep you on track. Do not change anything that you're doing. Stay exactly consistent with what you were doing originally, right? So maybe that's somewhere we need to step up. You can speak Spanish. We do have people in the team that speak Spanish. I think 2 people. Are you asking about, and I'm talking about this question here. Are you specifically talking about in the help desk, or are you talking about live streams that are in Spanish? That could be something we do. I don't know how comfortable our guys are with being on camera. I never planned on being on camera, but there's a need. I guess I got to be here. Hopefully I don't bore you guys on camera. I don't know. I don't have an answer to this. There's some guys that I've met that are intuition based that kill it. They literally kill it. You got to find out what works for you. And that's through analytical tracking of data. So if you don't want to put money on the line, and this is what I recommend to people, right? Do not put money on the line unless you have a back-tested strategy. I don't care if it's with us or somebody else. Please sign up for a practice account. Please back-test in TradingViews, Hero Chart, whatever. Make sure it works before you put your money on the line. Please don't waste your money. Backtest. Please do that. Max account. Okay, this is great. There is no max size. Here's the caveat for that. You will reach some psychological hurdle. Something will get in your way well before we find out what your max size is. You will find some diminishing return. I don't know what size that is. It could be 10 contracts. It could be 20. It could be 100. We will continue to add margin if you can prove you can handle the margin, right? I'm going to be straight up. You are going to find that you can trade far less size than you think you can. It goes for me too, right? That's just being honest. Most traders think they can handle 100 lots. Not likely. I don't think most traders can handle 100 lots. I don't think most traders can handle 20 lots, because you will start looking at the P&L and you will see every tick just up or down. You're going to see tons of money going either side, and you're going to find that you're going to hit an area size-wise, and you're going to stall there, and you're going to have to stay there or back off from there, and then build and build and build, and then take another step, build, take another step, build. It's a slow, methodical process. So there is no max size. There is a scaling rule where every 3,000 we'll add extra size. There's no max size at this point, but I can tell you most people aren't going to get to where they think they're going to get because of psychological hurdles. Yeah, I think the language a little bit difficult. I'm sorry. Maybe we can dupe it in like other languages. Maybe that could be beneficial. I don't know how much work that would be. Is it true TFD is covering CME live data for traders? Yeah, yes. We cover one exchange, one. If you need more than one, you're going to have to pay it. Being that you are trading our capital, you are considered a live trader. So we do cover one of your brokerages, or I'm sorry, one of your exchange fees, which could be CME, CBOT, whatever you trade in, right? We do cover it. Can I copy trades with another account in a trade copier? Yeah, you can copy trade with us. We don't have any issues with that. As long as, like, look, most of the rules that we have coincide with CME rules. So what's important to understand, if it's a violation of CME, then it's going to be a violation with us. Like we need to follow the rules and regulation that CME has, and that the commission has. Like we need to follow those rules. And if you're like taking reverse trades or hedging in different accounts, like that's a no-no. If we find that out, you're gonna be kicked from our program. We're gonna have to report you, stuff like that. Just follow the rules. Be responsible. But copy trading absolutely is allowed. Scalping absolutely is allowed. Bonds trading absolutely. Anything that has an edge, we want traders with an edge. That's our goal. Unlike other firms where you find an edge and they're like, "Hey, time out. We don't like your edge, guy. Hey, like get out of here. We're gonna change this rule. We don't want you trading with us anymore." We want to find those people because we are aligned with our traders. Once you're in a brokerage, like we both profit while you profit, right? That's the whole point. That's where we're different than other firms. Results when I stop trading too minis. Yeah, you're going to see results when you stop focusing on your P&L and make it about the process. Period. Cool. It seems like Sean already got his account set up. You're welcome, Sean. Hey, you got a picture now. Thank you. Hey, if you have any questions about that account, take it slow, steady. Don't rush through it. You got all the time. Trading's not going anywhere. So if you need any help or anything, reach out to us. Other than that, I'm going to go ahead and cut this stream off. I think we did a pretty good job on time. It's under an hour. I'm always available. Reach out to me via DM or through media. Let us know. We're here for you guys. Thanks for joining us. Appreciate it.